Now, I told you I have momentum signals that have turned bearish. It hasn't been enough to change most of the trending signals, and we continue to fail to be able to hold below the 20-period moving average here, the blue line. Is a requirement if we're going to get a reversal. So is this momentum shift, is this just short term, back up and challenge the highs and the resistance zone up here, or do we start holding below the 20 period, turning down, taking out this low, and start seeing the reversal become validated? So is what I'm watching is if tomorrow, and here we closed right here at the 10-period moving average, the red line, we're back above the 20. I was watching to see if we'd recover above that 20. We did. So the bearish OG or hanging man type of candlestick, we got to come back here and take out the support zone, take out this low, and not be able to flip the signal. If we flip the signal tomorrow, CPI with the futures rising, maybe we get a gap higher, a relief rally. Then again, signals turn back to bullish, momentum flips back to bullish, it buys the S&P more time, and as I've been talking about, we might get a divergence with green bars showing up here on the awesome oscillator before all is said and done here in the daily time frame and challenge these highs. That's why I'm telling you, again, if we get above this level right here, which currently our upper boundary of the cloud is at 52.37, and the red dots of resistance are right below it there. They're clearing the upper boundary of the cloud right there at 52.37, then you're going to flip the signal. But you got to close here, not just get an intraday push like what we had over here, not just get an intraday push above the cloud, but to be able to close above it, the cloud will flip to green, the bars will flip back to blue, and you'll be back holding above the 10 and 20 period moving average, not hopping, skipping, and jumping around them here. Really, the question is, do we get rejection here at these levels and see us sell off and break the support zone now, the low that we had today and the low over here, or do we get a rebound, start moving above the 37 area, the cloud, flip the signals, momentum signals back to bullish, and go challenge the resistance zone and try to take out the highs. So I'll be watching to see which way it plays out. Remember, the Dow has not filled that gap. It doesn't have to fill the gap. But if we get a rally, Dow can't make new highs. It might just fill the gap, and the S&P still might make a higher high for these resistance levels that I've been talking about. But I've been watching this awesome oscillator because it's not gone negative. Now, if it goes negative and we turn down, then that's going to be bearish. But if it turns back up, momentum will shift back up, and if we get a bullish reversal of conditions, buys us more time for the S&P 500. Keep that in mind. Buy more time, that will create so much complacency that if we do form a divergence here, once this divergence completes right here in the most recent price action, stopping out the shorts, sucking in the longs, then that can be followed by a rug pull by the big institutional guns. Signal turns back to bullish. Bears are going to be closing short positions, and then again, if we push up above overhead resistance, we'll be triggering stops on short positions. And if we see the signal turn back to bullish, it buys the S&P more time. Again, the 200 period in the daily time frame and the 20 period here in the 20 period in the daily, the 200 and the 60, pardon me. It's a line in the sand between the bulls and bears. If we take these levels out, the 20 here, 200 on the 60, to reversal. We bounce off these levels, buys more time. That is the line in the sand, separates bullish phase from the bearish phase. So I've been talking so much about those moving averages. NASDAQ had dropped back below the 20 period yesterday. We got back above it today. Again, a little bottoming tail, a higher low. So again, this candlestick, this bearish engulfing, never got confirmed. Back above the 20, the 10 is drifting down towards the 20. But again, got to be watching. Do we see the awesome oscillator turn back up and get another reference point of a divergence? We had a little divergence right here between this peak, and again, we might see another one. It's also possible that the NASDAQ, having gone sideways for 6 weeks straight now, 6.5 weeks, it's possible NASDAQ and S&P diverge from one another if S&P attempts to make a new high, that we've already have a divergence between the two right now. Break down, you'll have a divergence, but it might be that if the S&P tries to challenge the highs and go higher, that NASDAQ does not. I'm watching NVIDIA because NVIDIA has been going sideways. So far, it has not been able to move to new highs. It still might, because NASDAQ could, but I'm watching NASDAQ because it's gone sideways for 6 weeks. Watching these awesome oscillators on the daily chart, I'll be watching to see if we get a bullish reversal of conditions on NASDAQ. You got to be able to come up here and take out the cloud directly overhead, which is currently at 18,249.5. So 18,249.5. You start clearing this 18,250 area, and then you get your red dots of resistance at the 18,320 area. So again, you start clearing those levels, then you might challenge the highs. But if you don't, get a lower high and stay in the trading range. So I'll be watching. We break down, again, you've got to take out this low if we're going to turn down. So far, we have not been able to do it. Now, again, it might be that we have what we had in July on the S&P, where we got to sell off, we get a lower high, and then we come back and do it. Well, if we do, these awesome oscillators got to go negative. We got to take out the 20-period moving averages. Right now, we're trying to find support at the 20 period and bounce off of it, at least so far. We did close back above the 10 as well here on NASDAQ daily chart. NASDAQ 100 was up 70 points today, up 0.39%. So I'll be watching the awesome oscillators. Do we attempt to get green tomorrow here in the daily time frame? Rally with the CPI, get a relief rally? It's hot. Does the market just shrug it off and rally anyways? Last month, coming hot, and we see the market soft and get a negative reaction and start to validate a reversal. Now keep in mind, as we have the rally, we're seeing insiders sell. We're seeing billionaires unload, aggressively selling. Jeff Bezos continues to be an aggressive seller. Mark Zuckerberg continues to sell. And here, Meta platform insiders continue to sell. Insiders selling over the last 2 months, it's been very, very aggressive. Not much buying going on, but a whole lot of selling going on. Insiders are selling into the rally. Billionaires are selling into the rally. So just keep that in mind. Quickly, I just want to, again, update you on the commercial real estate sector. Again, we're seeing more concerning information. We only got the numbers at Chapter 11. Bankruptcies have jumped by 43% for commercial real estate. Why should we care about this? Because the banks have huge exposure. 50% of the debt with the commercial real estate sector is being held by U.S. banks, half of the $5.7 trillion. This is going to eventually spill over into a banking crisis, but we just got more information about this just last week, and I wanted to make sure I mentioned we're seeing more and more defaults. Actually, it's going to go over and create a banking crisis, and you're going to see banks fail. Maybe a lot of banks fail. This is bigger than what we saw with the subprime mortgage crisis and during the financial crisis and all the rest of it. Just something to be aware of. Over the last few days, we've seen the June rate cut canceled, came back. We saw it canceled again as of this morning. It was canceled, then it came back. What happens with that June rate cut, by the time we get through the inflation data this week and then move on into earnings, still have 3 cuts penciled in. That could quickly change. And again, economists are uncertain how many rate cuts we're going to get. We have some people out there saying we're going to get no cuts, saying maybe 1 or 2. Others still holding on for 3. Remember, started the year off, there was wishful thinking going on that we were going to actually get 7 cuts for 2024. Then it dropped to 6 and then 5. Also between 4 and 3 and holding at 3. But the June cut has been starting to get canceled now. And again, I told you I thought that was going to be the case and keeps going back and forth. It changes every day. But right now, gone for the moment, but it had been canceled out right after the jobs data came back, went away again, and then now it's back. So again, just keep your eye on this issue because, again, this could be one of the catalysts, possibly downsizing rate cuts for the year. This week we even had one Fed official. There might be the need to raise rates one more time. The message out of the Fed right now is we got out of Powell's speech recently, and again, they've all been echoing it, no rush to cut. Just keep that in mind. Please support the channel with the link directly below. That allows me to be able to provide you this information. Follow the link. It'll take you to a secured site. You can donate any amount you want. Please consider helping out today. I thank you for your consideration for that. We've got a lot of signals at extremes Negative divergence is forming at extremes, but it has not yet produced an official reversal. We got the 20 for that in the daily time frame, the 200 in the 60. Confirmation and a fall through of the break of the trend lines. We haven't had that yet. Signals either they're not done yet, we try to rally back up. The divergence on the awesome oscillator to play out, and we start taking out the 20 period on the daily chart of the S&P, the 200 on the 60-minute chart, seeing these signals begin to play out. But they're going to play out, but we haven't seen a confirmed reversal yet. We've seen momentum shift. Signals were bullish. We got them to turn with momentum signals turning. It hasn't changed the trend signals yet. So that's where we're at. But I'm looking at things like this. If we get one more rally, again, it may turn back up, something like what we had over here. Or at the October 2022 bottom, where you get a divergence here, or just move to a new high and get the larger divergence. But right now it's trying to roll over, but we don't have a confirmed reversal yet. The point is that signals, extremes, and forming divergences with the S&P 500. Ahead of the CPI, here's what happened. The Dow sold off 300 points, rebounded back up, only closed down by 9. Possible bottoming tail at around the 50 period. S&P sold off 0.75%, down well over 30 points at the lows of the session, rebounded back up to close above 5,200 to close just under 5,210, and ended up 7.5 points up up 0.14%. Dow pretty much flat. The S&P a small gain. NASDAQ was up about 1/3%. Russell the same, about 1/3%. The VIX was down by 1.38% to close just below 15. We'll be watching to see if we get a sigh of relief, a rally back up. Remember, the Dow has not filled its gap. The S&P and NASDAQ back over here, they filled their gaps. The Dow did not. So we still may try to challenge these highs because we're bouncing off the 20 period moving average in the daily, or bouncing off the 200 in the 60-minute time frame. You got to take out those levels if you're going to sell off. If you're going to back up and test the highs, you got to bounce off of them. Right now we're trying to bounce off of them. Moving averages, the 200 in the 60-minute time frame, the 20 in the daily time frame, to separate the bulls from the bears. Up below those levels, get a reversal. You hold above those levels, and you don't get a reversal. Those moving averages I've been talking about are very, very important. Seen a shift in momentum signals, some of the momentum signals, but we haven't really seen a shift in trending signals. And if we start taking out the 200 in the 60-minute time frame, the 20 in the daily, you will see both momentum and the trend signals begin to shift. Bounce, it buys more time. The trend lines with our rising wedge, upper boundary of the channel, and I talked about those in great length and detail the last few days. What happened today? We had a gap and trap, ended up giving us a bottoming tail and a hammer, giving us a higher low on the S&P. That's now the support zone. You take that out with the CPI tomorrow, that's going to be bearish. You get back above this 200. Look at the 15-minute chart. Over here, we went back, we filled the gap right here. We went back and we filled the gap right here. And it was a gap and trap. And we had that waterfall sell-off ahead of the jobs report last week. Nearly 4 hours of straight selling. Rebounded back up, went sideways. We formed this triangle. We got a false breakout of the triangle today. You got a topping tail just above the 200 period moving average. Turned back down into the triangle, broke down, went back and tested this low, and buyers came back in at the end of the session, getting this rebound right here. But we had a rebound earlier in the session, started to turn back down, got a higher low. So again, have a trend line to be watching. So we have this trend line. I didn't draw that straight. This trend line right here. And that was from today's intraday high and our high with the gap and trap previously. We come back, we take out that level in the 200. You get your rally, you come back up here and challenge this high right here and challenge the high over here at the 5260 area. Okay? If we break down, then you have your support zone down here with the higher low that set up today's lows around the 5160 area, and this low over here around 5145. The support zone down here, the resistance zone up here. We break up through the trend line or get a gap higher. That would be a sign of strength. If we get a gap lower and break down below this level, that would be a sign of weakness. So that's where we're at right now. But you did bounce after this gap down, gap up here and turned down. You did rebound back up. Still ended with a positive close. So we'll be watching clear the 200 on the 15-minute chart and the downward trend line. If you do, then we can challenge the highs, and we'll see if the Dow goes back and fills its gap. You know, this trend line right here, very similar to a trend line talked about on the Dow yesterday. I talked about how we were going sideways, and I said either the Dow tries to break up or can we go down and then try to break up. That would be bullish. If we come back down and we start seeing the S&P lose the 20 period, the Dow get a bigger drop below the 50 period in the daily, then the reversal immediately. But I'll be watching, can the Dow break above this level? And again, I'm still watching this gap over here on the Dow. Well, the S&P and NASDAQ filled it. The Dow had a more feeble recovery, never did fill it. So if we do rally back up, I'm watching that gap fill on the Dow. Dow possibly put in a little double bottom here. And again, P got the higher low. Here we're coming back and testing this low. We had this little miniature double top over here that gave us a sell-off market. Now you got a potential double bottom, and if we can clear this level, which was a little triangle that ended up breaking down S&P and Dow, the Dow, then you can break out and you can break above this level, above the 200 again on the 15-minute chart, get back above the 50. Then again, the Dow can fill the gap, the S&P could rally. Important trend line to be watching on the Dow and the trend line I just showed you on the S&P. Here it is on the 60-minute chart. And again, I talked about this yesterday. I talked about either pulling back and trying to break up or turning down and you know, starting the reversal process immediately or trying to break out immediately here. But I talked about these scenarios, and right now, well, we've had the rejection at the trend line, and now we've come right back up here to it. Is about to cross the 200 here on the 60-minute chart of the Dow. So I'll be watching to see if we, again, attempt to rally back up. And if we do, you've got a double bottom confirmation line there. If we can get back above our 200 period moving average and come back and try to fill the gap on the Dow, taking it towards the 39,550 range. Here on the 60-minute charts, I'll be watching, does momentum try to turn back up? We can break out of this channel right here on the Dow and that trend line, break above that trend line that I showed you on the S&P 15-minute chart, which again is right here. Now we didn't get above the 200 yet, but we did get above the 200 on the 5-minute chart. Again, S&P filled this gap over here, which is right here on the 5-minute chart, had that big sell-off, waterfall sell-off, rebounded, went sideways, broke down from the triangle, and now we're back above the 50, the 200 and the 50. If it can get back above the 200, if we gap higher, we start clearing this area, again, buys the market a little bit more time. Watching the trend line, the 200 here, and again, we're likely going to get a big move tomorrow, up or down, either a big relief rally, but if it comes in hot, even if the CPI comes in hot, last time it came in hot, the market ignored it. People trying to, on social media all over the place, why is the market rallying on hot CPI data? Sold off the next day on the PPI data, which we will get there on Thursday. Tomorrow we'll get the CPI inflation. So we'll see what happens. This trend line, let's take a look at the 60-minute chart. And here it is. And I was watching two things. I was watching to see if we close above the 200 or bounce off of it and close above it here. We did, or close below it. We bounced off of it and closed above it. Okay, we had, here it is, the triangle. It, you know, had a false breakout on the intraday chart, and it formed a little black candlestick here, a little hard to see. We dropped below the support and resistance line, the little orange line, which has been acting as support over and over and over and over and over. And we dropped, we lost it here. We bounced off at 200, went up, stalled at the 50 and the momentum line. The purple line's the momentum line, short-term momentum. And that 50-period moving average came back, and we're bouncing off the 200 here. Again, same thing. We're trapped between the 50 directly overhead, a little hard to see because the momentum line and the 50 are at the same level in the cloud there. And the support is currently the 200, and we had dropped below the support and resistance line, got back above it. So that's where we're at. You can bounce off these levels, break that trend line, get back above the clouds, then you've got your resistance zone. This peak over here, which was the gap and trap with the waterfall sell-off, and the peak over here, that is, well, I didn't draw that very straight, but you can see what I'm doing here. The peak here and the peak here, that is a resistance zone. Again, talked about on the intraday chart for the 15-minute chart or 5-minute chart, whatever it was, and the support zone is down here. So we break this, we take out the 200, then you're going to get your reversal in all likelihood. The odds greatly increase. If we start taking out the 200, you're going to get the reversal. Confirm a reversal with some of the breaks of these trend lines. So far, we do not have a confirmed, or a blood reversal, I should say. Confirmation, but no follow through with the breaking of the rising wedge. And then with the breaking of the trend line from the more recent lows, we don't have confirmation of that or a follow through, neither one. Again, I was watching the 200 today. I was watching the 20 period. We bounced off both of them. So again, we'll be watching. And if we go up through this level, again, it's going to trigger stops, okay? All the stops are above these highs right here. If we clear this area, go to the trend lines that I've been talking about in the daily time frame. If we break this level, it would be bearish, and you'd start getting the 50 dropping below the 200. Dow's about there on the 60-minute chart, so either it's going to get a big bounce or you're going to hold below the moving averages and get a big drop. So this is what I'm watching on the S&P 500. Pointed out we kept turning off of this trend line right here over and over and over again, and then we went back and we moved 3 points above it, turned back down. But this is where all the stops are. So if we're going to go higher, this is going to be triggering stops if we push above these two highs right here, okay? And if we start breaking down by the dip longs below this low right here, and the price is now trapped between the support zone and the resistance zone. So we'll be watching to see what happens with the CPI. If we get a break of the trend line and push above the clouds in the 50 period, then momentum can turn back up, buy us more time. If we get rejection here, momentum will move deeper into the negative region. We'll be watching to. If we see a sell-off, again, we had this rising wedge on the S&P 500. We saw it break down and backtest. We fill the gap. You got to take out this 200 period if we're going to get a sell-off. Right now, we're trying to bounce off of it. So if we go back up, again, these trend lines could be tested again. This one right here could be tested one more time. Try to move above the highs. We can go to the 5,300 area. You could even try to go to this one here. We also have an upward channel line, which is coming very close to the lower boundary there should we go above it. So do we break the 200 or do we bounce off the 200? With the session today, at the end of the session, we're trying to bounce off that 200 period moving average. To go lower, you got to take out the 200. Pring parameter has to go into the negative territory. We have multiple point divergences. They play out immediately. If they do, we take out the 200. That's bearish. We take out that level and remain below it. Again, the bears are going to pounce on it. We bounce here, buy the dip crowd comes in, and we likely get a head fake above this little miniature double top right here. Maybe move towards 5,300 or so, and the buy the dip crowd could buy the top again. Where the stops are shorts, the bulls, if we break that trend line I showed you earlier, the longs will try to buy a breakout there or overhead resistance. If we do rally, it could quickly reverse. Again, for the market to turn, you got to take out the 200. You got it here in the 60-minute time frame. You got to take out the 20, and we have not been able to do that. Warning signs with market breadth indicators, with divergences in the weekly and the monthly time frame, the daily time frame here on the 60-minute time frame. Those divergences have not yet played out. Momentum signal shift. Don't have a confirmed reversal, and you're not below the 200 period. You're not below the 20 period, which is required in order to get a reversal. Now, in the daily time frame, again, we've broken the rising wedge. If we go higher, if we try to get an upward resolution with the CPI data, and again, the broken trend line right here, the lower boundary, and then that's really very, very close to this upper channel line, a parallel channel to our lower boundary here. So just some trend lines I'm going to be watching if we rally with the CPI data. Turn down, I'm watching the 20 period moving average and the last minor low. But you've got these divergences, but so far they have not produced a reversal. A reversal broke down from the rising wedge. We got confirmation, but we never got the follow through that's required in order to turn down. First engulfing candlestick that we had, that was the confirmation, but we have not moved below that low. Now, again, it could be that we do. The reversal will begin, really be validated. Still may buy some more time right here. As I've been talking about, the oscillator still may on the S&P still try to turn back up, and if it does, this is the area that I'm looking at right here. NASDAQ's been going sideways for 6 weeks, now almost 6.5 now. Rallies further, same thing. It can rally up to the upper channel line that I've been talking about. If it can't, we start breaking down, then we may get that reversal with the CPI. I'm just telling you, it can go either way. We're at the moment of truth here. 20 period here in the daily and the 200 there in the 60-minute time frame. Divergences will eventually produce a reversal, and probably a pretty ugly one, because you have multiple points of diversions. Tend to produce reversals rather than corrections. Here's the trend line up close. Again, we broke the trend line over here. We got confirmation. Whoops. We got confirmation breaking below the 20 period, getting confirmation of that break of that trend line of our rising wedge. But we never got the follow through. Got to have the follow through. We didn't get it. I told you that, again, it might be the bearish engulfing that we get a confirmation of that bar and the follow through move, which would be one and the same, but we rally back up and then we turn back down. Possible happen in July. We got a bearish engulfing candlestick. It was not validated until we set up a lower high a few days later. We did turn and validate it. Could see the same thing here. We lose the 20 period. Now look at the blue line. The red line is the 10. The blue line is the 20. And look what happened. We dropped below the 20. Okay, we came up to the red 10 period moving average. Got rejection there, turned down, tried to turn down, couldn't do it. Got a higher low above this level. Got a bottoming tail possibly, or for a bearish scenario, possibly doji, a lower high if we, again, break down below this level. So again, a doji, a candle of indecision. You sold off, you rebounded back up, a slight gain here by the close, but still right near that 10 period moving average. So I was watching to see if we would close below the 20 period moving average, which was at 51.99, and we closed above it, closing back above 5,200 after dropping below the 5,200 area and losing it. Try to move above this high right here. Again, you still might get a divergence right here in the more recent price action. That would stop all the shorts out, suck the bulls in to buy a top, and then they pull the carpet, and you get something like this. If we come up to this trend line right here and get something like that, or if we try to come up to this trend line, or if we upper boundary of the channel, as I said, coming in up in this same area here. Say this again, we saw the stochastic turn back up. It turned back up with the gap higher at the open, and then we sold off, and it turned back down. It lost the bullish cross, but by the end of the day, we rebounded back up here above the 20 period, and it closed with the bullish cross. So again, it still might recycle back up there on the stochastic short-term momentum there. And again, our RSI is firming up, holding above 50 here. And again, we're just kind of drifting sideways really since March here. Here is another trend line again from these recent minor lows, and again broke the trend line with the bearish engulfing here. There's been no confirmation of that or follow through, so I'm watching both of these trend lines. This one has not been confirmed or gotten the follow through. The rising wedge, the lower boundary of it, broke confirmation, but no follow through on that one. So I'm watching those trend lines closely. Get a turn, we got to get confirmation and a follow through. If we get back above this broken trend line right here, you can hit the other trend line, rising wedge one more time. Those other trend lines that I've been talking about with the channel and the upper boundary. NASDAQ's going sideways for the last 6.5 weeks here. Again, we up and challenged this high right here, went just a little bit higher than that and turned down. Sell-off was taking us back towards these lows over here, but not quite. And if we take these lows right here, we're just above that area right there. We're taking this level out, be bearish. And again, at a rally, this trend line comes into play right here and the upper boundary of the channel line. Momentum just going back and forth, really just reflecting this sideways move. NASDAQ's trying to bounce off the 50 period. It got back above the 20 period. It broke this little trend line from the more recent minor lows here, but it bounced off this one going a little bit further back, the blue trend line there. So we broke the red trend line, but we bounced off the blue and the 50 period moving average. And again, if we can traction back up, we might hit that upper boundary on the weekly chart I've been talking about. You still have the bearish divergence. If we're going to get a turn down, we've got to take out the 50, drop back below the 20 there, drop below the 50, and see the MACD go negative. Short, we have a parameter with a massive negative divergence. We've been going sideways for 6.5 weeks. Saw the RSI drop below 50, get right back above it, firm up like it did over here and over here. So again, stop making new highs. Does the black candlestick hold? Go up and try to hit that upper boundary channel in the weekly time frame. Same thing here. Clear this little downtrend here from these recent minor highs. We are down earlier in the week. Currently, we're up about 1/3% for the week. Again, I told you if we get a rally to new highs, still may try to hit this upper boundary of the channel, but you've got these divergences that are playing out. They're already formed, but played out, I should say, that have completed. Do try to rally, it may not last. But again, sideways for 6 weeks straight. We need either a breakdown for off or a rebound for rally above the current trading range. Do rally, again, this is the trend line I'm watching, that blue upper boundary. Again, you've got all these divergences. Again, even if the S&P rallies to a new high, NASDAQ still may not, but it is possible that if we do rally, that upper boundary, that trend line comes into play here. But all these divergences are likely going to produce a sell-off like we had over in 2021, when again, nobody thought it was possible. Bullish targets 22 painted a rosy picture, and nobody expected it. We were told everything the Fed is going to do, it's already all priced in, and NASDAQ dropped 37.5%. Now, we've had the VIX turn above the 200. It's turning back down. Off at the CPI, we could see a big sharp move higher with volatility, but if it drops back down, again, you still have this gap down here. If we get a relief rally with the CPI, it would buy the S&P a little bit more time. Stochastic's now rolling over on the VIX, but we're still above that 200. We drop below the 200 tomorrow. Today could be a bottoming tail, testing our previous low. The S&P could still try to challenge the highs. If we see a bullish reversal of conditions with momentum. Momentum is still bearish with many indicators, but the trend is still bullish. Indicators have not had a confirmation of follow-through, breaking of the trend lines. And with this one, we've had a confirmation, but no follow-through. With the other that I'll show you later in the video, we've had neither. Ahead of the CPI data, the 10-year Treasury note yield is turning back down. Now, again, it broke above overhead resistance. It cleared this overhead resistance, but it's now resting right on that level. And if we do see a 10-year drop on the CPI data, it can move back to the trend line right here. The Dow could still fill its gap, or did, and we would see the oscillator turn up and form a divergence in the most recent price action, which I've been talking about. If we bounce off this area and we see the S&P break the 20-period moving average, close below it, we see a break below the 200 on the 60-minute chart on the S&P, these would be bearish events. Yesterday we got a little topping tail. Today we get a sell-off of 1.27% back to the support level. So do we bounce off the support level, or do we break back down, build momentum before going higher? So we'll be watching to see how it unfolds. The CPI, we still could see this go higher. And even if it does go higher, the market shrug it off again like it did last month. A miss on the CPI data came in hot, and the market ignored it. But we'll see what happens. The following day, we'll get the PPI data. My number, by the way, is supposed to come in higher on a year-over-year basis. The core number is supposed to come in lower on a year-over-year basis. We'll be watching, and the month-over-month is supposed to come in about 0.3%. I've been covering that earlier in the week. I'm not going to show that to you today. Quickly, the dollar. The dollar, again, we've broken out of the bull flag pattern, and we've come up above the 200 and the 50. They got a golden cross, and we're now trying to find support at those moving averages. And again, a bigger pullback, we've got a golden cross now. So again, spell trouble for the stock market. It's a negative correlation more often than not with the dollar. It's in a bottoming process. If it breaks overhead resistance, which it's attempting to do, or it was attempting to do. I'll show you that on the weekly real fast. But here on the monthly, if we can get above the 20-month moving average, stock market could peak. Last time we did that is when we saw NASDAQ peak in 2021. P followed it. Again, S&P's acting like NASDAQ Junior now, so again, maybe they peaked together this time. They bottomed together in 2022. But we broke the downward trend line just like on the 10-year Treasury note yield. And again, we're kind of just consolidating, back testing that level. You start clearing overhead resistance. We already did clear it on the 10-year Treasury note yield. A little topping tail just above it. So again, we drop back below it. But here we're just underneath it with the dollar. And if we try to break out, see strength with the 10-year and the dollar surrounding the CPI being reported or the PPI wholesale inflation tomorrow, that would be bearish for the market. We break the 20 period on the daily, we break the 200 on the 60-minute chart. But if we, again, continue a consolidation or sell off dollar and the 10-year with the CPI, buys the S&P 500 more time. Again, do we get the hot CPI report that the market sells off, or a cool one that we sell off, or does it come in hot, defies logic like we've seen before, where the market just ignores it? Remember the jobs report last week. The jobs report came in strong. I think the market would sell off with that, but as I talked about before the jobs report, it might defy logic. We saw with the CPI data last month. Again, there's some things to be paying attention to because the dollar and the 10-year have a negative correlation with the stock market.